Okay, for this video I wanted to cover IRS Form 8606 with an example of what happens when you have distributions from a traditional IRA and you have some basis in that traditional IRA. So I've got a couple pieces in front of us here and the example to walk through. Obviously the 8606 is in front of us and is part of a sample Form 1040 I've got here for our taxpayer John Doe. And then in addition to this, we've got a sample 1099-R that we're going to use for this example. And then also an Excel spreadsheet here, which is going to show kind of how we're tracking our basis in the traditional IRA and how ultimately the distributions are going to be subject to tax when you take the money out. So to start, I want to talk about the 1099-R here. So this is a sample 1099-R. Looks familiar to a lot of taxpayers. So you've got this from whatever the bank or the custodian is. It's got the name of the taxpayer. And because this is a traditional IRA, typically what we see is you'll get the gross distribution amount. So John here took $3,500 out of his traditional IRA during the year. And then in box 2A, the taxable amount will be 0. And then there'll be a box 2B checked here, taxable amount not determined. Now the reason for that is because when you have a traditional IRA, typically, right, when you take money out of there, the whole thing is going to be subject to tax, right? Because when you put money into a traditional IRA, you're allowed to deduct the contribution in the year you put it in. And so what happens is the earnings grow tax deferred, so when you take the cash out, it's just all going to be subject to tax. So a lot of taxpayers find themselves in a position where the total distribution is going to be the taxable amount in that period. But for some taxpayers that make traditional IRA contributions, they might not be able to take a full deduction for the contribution in that tax year. And if that happens, you need to be filing the 8606 to track your basis in the traditional IRA. So the Form 8606 here is filed for effectively one of two reasons, right? So the first reason to file this is if you make a traditional IRA contribution during the year and you're not allowed a full deduction for the amount. If so, then you need to be filing the 8606 to track your basis. The second occasion when you would file this is if you have distributions coming out of the traditional IRA. So you've reached the age of retirement, now you're taking money out. And when you pull the money out as a distribution, you need to appropriately calculate how much of the cash distribution coming out is a return of principal versus an income inclusion. Okay, so let's look at the Excel sheet, and hopefully this will make it a little more clear because I understand it can be quite confusing. So we've got John Doe here. This is his very simple traditional IRA basis tracker. So what John was doing was he started putting money into the traditional IRA in 2011. So the amount of contribution that he put in was $5,000, and he was allowed to deduct $5,000 of that contribution because he was within those income limitations. Remember, traditional IRAs, you can generally deduct the full amount, even if you're covered by a retirement plan at work, as long as your income is below certain thresholds. So what John was able to do here was he was able to contribute cash 2011, 12, 13, and 14, and he was able to deduct the 100% of the contribution on his return every single year. So when you are able to deduct the full amount of the contribution, your basis in the IRA is 0. Then look what happened in 2015. In 2015, John got a new job or he got a raise and he started to make too much money. Well, let's call it too much money for purposes of deducting the traditional IRA contributions. So John still put money in to his traditional IRA. He put in $5,500. But he was not allowed to deduct any of the contributions on his 2015 return because he made too much money. So because he wasn't able to deduct those contributions, now he has to track his basis in the IRA. So your basis is effectively the amount you put in that is not allowed to be deducted. So we can see here that for the next however many years this is, 6 years, he was putting money in every year, but because his income was over those thresholds, he wasn't allowed to take any deductions. So his basis starts to increase. Now, starting in 2015, that's when John should have been preparing an 8606 form to track his basis in the traditional IRA. And so now we've reached, John's retired, and now he's going to start taking money out. So what does he need to do as far as reporting how much of the contribution is taxable versus how much is a return of principal? So in the 2021 tax year, his total accumulated basis was $34,000. And then the fair market value of the account at the end of the year was $66,804, right? So obviously the account has grown in value because he invested in stocks, bonds, he had dividends paid out, and none of it was subject to tax while it was in the IRA, right? Because it's a tax-deferred investment vehicle. So these are the amounts that he's concerned with now, right? What is my total roll-forward basis at the time that I start to take money out? And what was the fair market value of the account at the end of the year? So it's these two pieces plus the distribution during the year that need to be translated onto the form 8606. So if we look at the 8606 here are the relevant fields we need to complete. So we're doing part 1 here. Line 2, enter the total basis in the traditional IRAs, right? So $34,000. Remember, $34,000 is his basis. It's not necessarily the total amount of cash that he put in throughout the life of the IRA, right? He put in $55,000 in cash, but he was able to deduct these portions here, so it's only the remaining amount that wasn't deductible that's his basis. Okay. Now, some taxpayers, high net worth taxpayers, and I have some clients that are like this. Their entire traditional IRA has basis, right? Because they were never able to deduct anything. So in their case, you know, this whole column here is completely zero, and their basis is everything they put in. You might find yourself in that position, but most taxpayers are in this position where they were able to deduct some of it, and then other years they weren't able to deduct it, so they have to track the basis on a yearly basis, on a year-to-year basis. So if we go back to the 8606, there's our total basis in the IRAs, $34,000, and then enter the total value here, line 6, of the IRAs at the end of December 31st, 2021, right? So what's the fair market value of that account? Then on line 7, we enter the amount of distributions from that traditional IRA, right? So there's the $3,500. That should reconcile with the 1099-R that you received from the custodian. And now we just complete the rest of the worksheet, and a lot of it is just simple math, right? So we add up the total value here on line 9, which is basically we're just taking the fair market value on line 6, adding back the cash that came out during the year, and that's the total, let's call it fair market value at its peak during the calendar year. And then on line 10 here, we want to divide line 5 by line 9, right? So we're dividing the basis divided by the total fair market value, and we're coming up with this percentage of 0.48 or 48.36%, right? So that 48% represents the total value of the account that has basis. And so what we're doing now is we're going to allocate this $3,500 using that percentage between what is a return of basis, so return of principal, versus what is going to be recorded as income. So if we complete the rest of the math here, what we find is that the non-taxable portion of the distributions, the return of principal is $1,693, and then that difference between $3,500 and $1,693 is the $1,807. That is the taxable piece of the distribution. So that's why when you see these 1099-Rs, even if the custodian tries to tell you there's a taxable amount here, you should always be tracking your basis on your own to make sure it's accurate. But in most cases, they'll leave this blank and they'll check box 2B because they don't want to make any assumptions. They don't even know. So once you have this form completed, now we can go up to page 1 of the 1040 and input both the gross distribution and the taxable portion. So if we go back up to the page 1 of the 1040 here, John Doe's 1040, line 4 is what we're looking at here, right? The gross amount of the distribution, line 4A, is $3,500. Then the taxable piece on line 4B is that $1,807, right? So the difference there, that $1,600 number is not going to be taxable on your Form 1040. It's a return of principal. Okay, so that covers it. I hope that was helpful. If you have any questions, please leave me a comment below. I look forward to your questions and comments, and I also look forward to seeing you again on the next video. Thank you.